Today in the crypto space, we see the market taking a bit of a dip, Bitcoin down to approximately 107,500 and Ethereum right around the $2,600 mark, while the rest of the crypto space, these altcoins are also dipping down to lower levels. And the question is, how low do we go? Can we be buying some dips? Are we going to get a quick recovery here in this market as Ethereum is showing a little bit of strength? Today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about Render. Render, guys, a project that has been looking pretty good the last little while. However, guys, there's some news that we need to talk about. So you know what? Let's talk about the news. Let's analyze the charts and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunity, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with the crypto space. We see the overall market cap, took a bit of a dip, but it's still sideways within range. Yes, it's down 4%, but we see the market cap still hovering around the $3.5 trillion mark. We're still okay here, guys. We're not getting a lot of volume today, as you can see. No real major spikes in volume. Market participation is not there. And if you kind of go through the rest of the market and you kind of see what's happening, yes, there's a bit of negativity. Yes, there's a little bit of green, 2 to 3%, depending on the project that you're looking at, guys. There's some that are dipping down a little bit more. And we got to ask ourselves, why is that the case? And of course, it's because there's a lot more downside potential, given the fact that maybe that project has run up significantly in the last little while. Hence, hyperliquid. Okay, so this is something that we really have to understand, is that when projects run up really heavy, really hard, and with a lot of aggression, it leaves imbalances below. It leaves weakness. It leaves opportunity to see retracements and pullbacks. And if you're one of those individuals that buy into green candles and buy into pumps, you're taking the risk that the project essentially is going to roll over and turn back. And the reason being is because when projects run, people take profit. And Hyperliquid is in that stage where it's like, okay, we celebrated Hyperliquid. Hyperliquid did very well. Hyperliquid most likely is going to continue to do well. But in the meantime, if we do see any negativity, expect Hyperliquid to react a little bit more aggressively than the rest of the market. Why? It's because it has been up over 100% in the last 30 days. Of course, not including today's dip of about 9.5%. So this is something that we have to understand. Now, in addition to that, we have to understand that each project has its own range. For example, Solana, going sideways, but still within range. And it is still down approximately 5%, 4.8% to be exact. However, it did not make a lower low just yet. And obviously, we have to understand, these fractals right here, they're 1 hour fractals, right? So they're lower time frame fractals. We could get a dip by tomorrow morning. We can see reactions and this and that. We know this space is very volatile, and especially if you're looking at lower time frames and even, smaller market caps. But Solana is a large cap, it's likely to, stay within structure until proven otherwise. Of course, we look for data to suggest what to do next, staying one step ahead of the market. But at the current moment, guys, a lot of the projects are still within range, very healthily, for that matter. Altcoin getting a bit of a pump based on some news. Altcoin is getting a bit of investment. I'm going to look into that a little bit more. Maybe we can discuss that tonight on the live stream. Feel free to join, guys. It's at 8 p.m. EST. We talk about crypto news and price action every single night here on the channel. You can see AVAX holding steady nicely. We got a lot of good projects holding steady nicely. Monero taking more of a dip than usual, but we have to understand that maybe this is an indication. When Monero was running, it's because Bitcoin was showing a lot of strength and maybe people were taking profit, and sometimes we see people take profit in Monero. And the reason being is, guys, do your research. That's what I'll have to say about that. But ultimately, guys, seeing dips after major runs is absolutely normal, guys. There's a lot of imbalance, like I mentioned. But as we scroll through here, you can see some projects are down 3%, some of them a little bit more. But, 2 to 3% is probably the average here. Caspa coming down 5%. We got Trump coming down 5. VeChain 5, but the rest, Render, guys, we got to talk about Render. Guys, today's video, as you know, is going to be a little bit more about Render. We're going to talk about Bitcoin also. We're talking about the overall market, a little bit of an update of what's happening today. But Render, guys, Render is taking an unjust beating at the current moment. And I'm going to tell you something, guys. The misinformation runs wild in this space. And this is why I come every single day to go live, and I go live and I release these videos in the afternoon to help you guys really understand what is happening and to identify undervalued and overvalued scenarios. And currently speaking, this current dip that we're seeing, this exaggerated dip that we're seeing on Render, is basically the FUD that is created behind what's happening with Coinbase delisting. And I'm going to tell you this, guys, the listing is not, Render is not being delisted. Pay attention to the ticker. If you don't know what Render has gone through, we have to understand that the old ticker RNDR, if I'm not mistaken, is getting delisted from Coinbase, but that is the old Render. That is the Render that was primarily on the Ethereum blockchain. That was where it was listed. That's where Render began. And then about 6 months ago, don't quote me on that, but around that time, Render, the team, decided to go and basically change blockchains and become a Solana project. And since then, they took the opportunity to rebrand themselves to the ticker of Full Render, the exact spelling RENDER. So a lot of people on socials, including within the communities, and mine included, BTD Crypto on the Discord, feel free to join, guys. We're talking all the time, trying to figure things out, is that they think that it's going to get delisted on Coinbase, but it's not. It's the old ticker, guys. Render right now is getting fudded on based on the delisting, and this could be an undervalued scenario, the scenario where we are getting oversold based on the misinformation, guys. It is super important that you do your research and that you keep in line with what really is happening in this space, and then you could take full advantage of over-exaggerated scenarios. Okay, so Render, we'll take a look at the chart and see where we're at with that one. Ethereum definitely rolling over a little bit, but still making a higher low perhaps. Nothing really crazy there, nothing really to worry about. We got Matic. Believe it or not, Matic went through the same thing that Render is going through right now. We have a lot of projects that that are going through the same thing. Phantom did the same thing, and many others, guys. And we have to keep up with the facts. Okay, so Matic is at a nice little floor price, getting lots of little supports and even resistance, going sideways, planking there, looking pretty good. And a lot of projects are planking. Celestia's planking, Algorand's planking. Filecoin is kind of waking up a little bit there. Not too bad. Quant pumped very nicely in the last little bit, so that's not bad. Bonk planking. We got a few plankers. Sonic planking here. The previous Phantom, as you can see, planking. I think, this is a good project. Obviously hasn't been doing well, but a lot of projects haven't been doing that well, unless you're looking at virtuals or something. Virtuals have been killing it. But again, I think it's a little bit iffy. And look at the dip. When we get red and we get negativity, look what really happens. We come down a little bit more. What else do we got? A few dips here on Fartcoin. If you're into the farts, it's dipping, guys. What else do we got? Immutable X and a few others. This is the thing here, guys, is that the market is very volatile, even when we do not have volume. Because 2 to 3% up and down like crazy is also an opportunity, to find those floor prices, to find those reactions at floor prices. And you can see a lot of them are doing that at the current moment. And we're not even getting that much volume today. So quite interesting moment to pay attention, with calm and all your senses, and to figure out, which projects are actually hit a fair value. And that gives you an indication that, maybe it's an opportunity to find, setups that you might find interesting. All right, guys, I know you're here to talk about charts, so let's begin. Let's see what's going on here with Bitcoin, and then we'll jump right into the Render chart. Bitcoin is currently dangling right here at these levels, the levels of which is price discovery, currently backtesting the previous level of support. Perhaps we go into some sort of consolidation, an extended consolidation, or maybe not, maybe a little bull flag where we continue to the upside. Let's take a look at this in a little bit more detail. Now, ultimately, what we are seeing is that Bitcoin has been showing a lot of strength all the way from this bottom, right around 76, all the way to here. And now we are currently hitting a bit of resistance. But to be honest, I think it's more of a psychological thing. I think it's more of a psychological thing, given that we already entered price discovery. Now, is it going to be a scenario where maybe we consolidate right into here for a little while and then come back down and slowly start rolling over? Possible, guys. You know, these are all game of possibilities. Nobody knows exactly what's going to happen. I don't have a crystal ball to tell you the future. All we could do really is look at liquidity zones level to level and see where we could potentially come down to based on supply and demand. And at the current moment, you know, the daily's still okay in an uptrend, and we are still making higher highs and higher lows. We're still within that little structure, and I definitely want to get on lower time frames here, but I also want to take a look at the indicators that I got going on. Let me see what we got here. See, on the daily, what happens is that we did roll over, and you can see a bit of divergence forming here on the daily, which is not a good thing, obviously. But I also want to mention this is that we shouldn't be trading oscillators, you know, in absolute. We should be looking at other confluences, particularly putting precedent into price action and market structure. Now, if you're going to use and start trading oscillators, you're going to, you know, rudely awakened by the difficulty of catching an edge. You can see that we are diverging, no doubt, but as long as the trend is making higher highs and higher lows, how can we actually say that the supply is outperforming demand? That is not currently the case. You know, as long as we make higher highs and higher lows, we know that there's more demand than there is supply. So this is something that we could be showing a bit of weakness with regards to the aggression and the strength of the impulse. But usually when there's no resistance, look left. Obviously, there's nothing here, no volume, not much happening. We don't need aggression to keep on, you know, melting to the upside, right? That's the reality. So guys, in bull runs or in scenarios like this, it's very, you know, very likely that we see you know, a price action that doesn't really reflect previous historical levels, in the sense that we could keep on melting to the upside, and we need to be prepared for that just in case. As we do see the trend oscillators also showing a bit of weakness, divergence, confirmation, rollover, red histogram bars here on the daily. But ultimately, do we go for another impulsive move? Why I am thinking that is because of this. You can see the volatility line has gotten oversold. And every time we get oversold, we come down to these levels. You know, even if we hesitate a little bit like we did here, eventually we go for a response. Eventually we go for a response. And every time we go for a response, even in a downtrend, we spike. We spike, we spike, and we spike, right? It doesn't matter even if we're in a downtrend. Obviously, if we are in an uptrend, when momentum is moving upwards, the purple line, and we see volatility push up, we're in confluence with both the momentum and volatility, it is likely that we see a lot more strength. For example, what happened here, we were oversold, we got a bullish response. Over here, oversold, fine, boom, bullish response. Now here we are again, bullish response, maybe another higher high, despite the divergence. And this is why I say, like, sometimes divergences get invalidated, and sometimes they don't get invalidated, but we get multiple drives of divergence. And this is very indicative of a bull run where we stay overbought longer than we do oversold. And this is why I'm saying here, guys, market structure is king. Now, if we go down to the lower time frames, let's quickly get down to the 4-hour. You can see that we need to respect structure, and we have been. It's not like we came down and made a lower low. This is a level of interest. This is a point of interest. Now, if we do break below, guys, of course, we need to be worried that we could come down, obviously, and prepare ourselves for this psychologically, economically, obviously, all of that. We need to have a risk-to-reward ratio set up here, because ultimately, if we do break down here, we are coming down to hunt levels of liquidity. And that's where we have it, is in this order block, right on to this level, right between 103, 104 to about 102 and change, right around this level. Now, at that point, you know, of course, we're going to be hunting that liquidity. You know, the market's going to come down. Are we going to sweep these lows and, you know, hunt this level, come down, sweep, and then get back up? Who knows? Maybe that's possible. And it's very, very, very possible that it happens. The better question is, what are you going to do about it if it does? Are you going to buy the dip? Are you going to wait for a market structure down here that suggests pivot? And I would say that would be the safest thing to do, because then you could put a stop loss underneath, do what you got to do in this level, and see the recovery. Now, in the meantime, Mike, don't get ahead of yourself. We're still within structure. We're still within a range. We did not make a lower low below this low. We're still holding up very nice. And in fact, we didn't even break a high above this high. We did get a confirmation high, which is a lower high. I don't like that. I know you don't either, but this is the name of the game. Now, what about if this is a bottom? What about if this turns into a symmetrical triangular formation? And I haven't seen those for a good while, to be honest, guys. To be honest, like ones that were nice and tight and just literally did one of these. We haven't seen those for so long. And it would be interesting to see because these are scenarios of which usually see continuations, right? And the strategy here is to wait to get as close as possible to the apex, and at that point, and especially around the 70% mark, when you get right around here, 70% towards the apex is usually where you get some sort of reaction. And because we're coming in from an impulsive move, this would be a consolidation, maybe a quick distribution, and then we could bounce around here and then boom, straight out of there, upwards or even downwards. And this is why we need to prepare our bullish and bearish thesis. To be honest, the bullish thesis is easier. And because we can see it's a continuation pattern, if this does happen, again, if we do not know, but if this happens, even if we go sideways within a bull flags do break down and they look like Bart Simpson patterns. But bull flags tend to have a bias to the upside, statistically speaking. Okay, this is all about a probability and statistics that can be gathered over many years of collecting data of charts, and this is what people of the past have done that for us to use. Now, obviously, the bearish scenarios very clear. The bullish scenarios are very clear. The invalidation is also very clear. Look at your invalidation. If we break below this white line right around this level, we come down for the lower low, it's done. It's very difficult to maintain your bullish stance. The exit pump might be your opportunity to exit without getting too wrecked, without losing, and then you come down, maybe another lower low, and then we come down to this level. That's the level of interest. That's where you need to have some dry powder ready to go. Maybe not for Bitcoin, maybe some of the alts. You could ask yourself, what are alts going to look like if that happens? The altcoin market's going to take a bigger dip, and that's going to be a bit of an issue, of course, because a lot of us degens hold altcoins. But in the meantime, that's the opportunity, guys. That's the reality. Now, the easier thesis for Bitcoin is to see it squeeze and continue moving to the upside after the symmetrical triangle, or maybe it's not even a symmetrical triangle, guys. That's the thing here. We just try to figure out what could possibly happen so that when it does happen, we have a plan. We can react without emotion, very calculated, very strategic. And as you can see, even as I'm speaking, we're seeing that the bears are pushing and eating up the green response that we had right around this level. So let's take it easy here. I don't think that we're here at this level meant to fall very hard, but definitely interested to see if we could come down to about $102,000. Okay, so that's that, guys. That's Bitcoin. Now let's talk about Render, guys. What's going on with Render, guys? I'm getting messages all over the place. What's going on with Render, delisting, this, that. Guys, Render's not getting delisted anywhere. It's one of the most bullish projects out there. Now, fundamentally, it has a partnership with Apple. They've been, dealing with Apple for a good while. And, and this happened in the past, guys. If you've been in this crypto space, you've seen this type of scenario where a project updates its ticker through rebranding or just an update. Matic, Phantom, prime example. As soon as the old ticker gets delisted, everybody panics and assumes it's the new ticker. And that is an unfortunate thing, both from, in this case, a Coinbase perspective. They should have announced it a little bit clearer. They don't really clearly say that it's the old Render, that everything is safe with the new contract on Solana. And this is something that maybe could be done to improve the clarity, to protect people that don't understand this space and maybe that are not in tune or just not paying attention. We do have busy lives to pay attention to all those tickers, guys. Trust me, I know it's taxing. It's a lot of work. But then again, that's what we do here on the channel, guys. We try to stay one step ahead. We try to figure out what's going on. And I'm telling you this, Render is not being delisted on Coinbase. So maybe we can say that this dip that we're seeing, this exaggerated move to the downside, might be an opportunity. Why? Because people right now are emotionally selling based on this false narrative, the false narrative of getting delisted. So in that case, where do we find some support, guys? I'm going to tell you this on the daily. If we keep on dripping down like this, we start breaking below lows. The market is so, let's say, crazy, right? With the volatility and all of that, people don't even care if it's false news after a while, because the fear kicks in and people are like, oh, it's coming down, I'm just going to sell and buy the bottom. And then more and more people think that way. We start to use Fibonacci theory. And why do you think that is? Well, Fibonacci theory is a theory that explains natural behavior, including human behavior. And if at any given point the human behavior suggests that every majority of the market is going to start to get fearful, guys, it's going to be the golden pause. pocket that we need to potentially take a look at. And you can see that if we don't get support now, like I mean soon, like right within this level, we start to introduce pockets of a volume gap, basically no liquidity zones of which the price could easily drip down to. Doesn't mean that we can't get another dead cat bounce right into here, right? And potentially, look for a potential neckline. And a lot of you guys that are trade patterns are going to say, well, that looks like a head and shoulders. Yes, it will kind of look like a complex head and shoulder formation, but we also have to understand that the complexity of the or the head and shoulder formation altogether only gets bearish when we actually confirm a lower low. This was not a lower low scenario, neither was this and neither was that. So reality is we're still holding up at this level for support until proven otherwise. If we break below 4.16, right, 4.16, $4.16, then we can kind of say, all right, maybe we're going to fall into the discount zone, which based on Fibonacci is lower than 50%. So coming down below 50% is basically dropping below $4. Now, what would I do here, guys? Obviously, it's the tricky situation. Trading emotions is so difficult in this space because, again, nobody knows. Emotional is irrational. Emotion is, there's no explanation. So if we do come down to these levels, golden pocket, 786, 886, these are all decent levels. Now, I also want to bring to your attention your invalidation, which would mean that if we do get bearish here, it has to break down below this level, which is $2.50 more or less, because that big picture based on market structure will suggest that render is now basically in another downtrend from a big picture perspective. And then we start to say, well, maybe this was a dead cat bounce and we come down even further. Where's the next level? Well, the next level of liquidity based on supply and demand is to come hunt the liquidity right around this zone between $2.80 all the way down to about a dollar more or less, because that's all this volume is a bunch of goons holding spot and maybe leverage, and ultimately they're going to be emotional about this, and especially as stop losses and all of that get hit at about $1.12, right? And all those liquidations that get triggered at $1.12. These are important because of these bottoms, guys. People put liquid stop losses and their liquidation points at that level with their margin and all that. But again, I don't want to be overly bearish here. I want to be as modest and as honest and transparent as possible, because we are seeing the market wake up a little bit. To be honest, we do have to identify that render as a chart is not looking the best either. Lower highs, lower lows. The trend is down still, guys. Look at this. Let me just make this a little bit thicker, just so that we can navigate this a little bit better. You can see we're still in a downtrend. This came lower than this low. We made a lower low, guys. There has a lot to work to do to actually convince us that render has done dipping. Right now, for early investors, early individuals that got in early, guys, I was in render very, very early. Now, of course, a lot of our gains, unless you took profit, would have been taken away from us on these dips. Now, the emotions do kick in as we get closer to lower levels. Now, are these levels going to be defended? That is the bigger question. Let's take a look at some of these oscillators here, guys. You can see that we didn't even get overbought on the daily, which leads me to believe that the possibility is still there. And then based on that fact, we start to say, okay, if the possibility, let me just zoom in here a little bit more. You can see that we didn't get overbought here after coming down to getting oversold. And it's not like we got severely oversold, right? And it's not like we got severely overbought, but it could be that we get into an overbought state once again, meaning that we pump to the upside after getting some support on the chop zone. And that happens a lot. And if that happens, it's most likely that we're going to see this as a bull flag. Impulse, continuation, and then impulse. And that's what head and shoulders eventually do when they break out bullish. They end up resembling bull flags more than they do head and shoulders formations. However, if we do see the price come down and get oversold down here, that means we're probably going to get the follow through from the oscillator and start looking for those discount zones. Again, golden pocket 786, 886. Those are good levels to potentially watch out for point of interest. And then again, your invalidation for this zone is down here at $2 more or less, right? So basically what you're saying to yourself is, if I am fundamentally bullish and I appreciate what render is as an asset, my exposure should be right around this level, and my invalidation of this bullishness might want to be right around here and anticipate that we come down to hunt liquidity at lower levels. That is the scenario here with render. Now, I do not like one more thing here. I'm just going to be honest here on the daily. You can see that this is looking pretty ugly. We got the bearish divergence right here. EMA is facing down, red histogram bars, kind of ugly. So, guys, that's the name of the game. You know, things don't look good. They all come down at once. The market right today is not looking the greatest. Do we get another shakeout for the next little while? Could be possible. But there was a lot of green the other day, guys. A lot of green. And, of course, you need to understand that the market works in peaks and valleys. Don't be emotional. Don't buy green pumps. Buy levels of support, buy levels of which you can invalidate yourself and protect your initial investment and your capital. You don't want to be gambling here in this market because it definitely is ruthless. All right, guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. See you tonight at 8 p.m. EST, where we talk about crypto news and price action. Have a good one, and don't forget, buy the dip.